Good morning, everybody. All right, let's see where things are at. Kind of quiet. See where it gets rolling here. Charts. Yes, McGraw. I do forget, don't I? All right. So, little tiny to start here, up a little bit. There was a little bounce. And so we've created a little shelf of support here on the hourly chart. This is the factory work. We, move up, creates the void. Let's open that up a little bit. All right. Move up, creates the void, supports down here. It creates a pivot. It retests. That's where we suspect buyers will show up. And they did. And so now we got two pivots to the left there. It's in an uptrend. Based on this time frame, the assumption is it goes higher. Now, it's up multiple days in a row. How high can it go without a pullback? Well, sometimes a lot, you know. It did have a monster reversal down there. I would have sworn it was going lower. Our factory work is at stay in the bottom half. I mean, this is what saves us, right? We have to create a bias based on what is. And then we need our analysis tools to keep us from getting run over, to keep us honest, so to speak. And one of our tools is, hey, here's a big wide range bearish bar. It creates a void. What does that mean? That means power to the downside, which suggests it should go lower. That said, we know historically, if it's really weak, the opens and closes are going to stay in the lower half. Sometimes you get tails up there and it comes back down. Didn't do that. Just ripped right through that bar. Right? That's the weakest link, as I like to call it. It's a power bar, but the weakest link. And I can show those of you that are new, you get to understand what Dan and I talk about day to day and why. So, very powerful, decisive, drive lower, right? Buyers just walk away. Okay, now it rallies back up, back down again, and so on to the next level. Well, when it goes all the way back up, it's like, okay, it ain't doing it. You have to flip. So now, question is, how high can it go? Now, 4,300 is right up here. That's a big level. And this is the futures. We look at SPX. So, somewhere between here and here would make sense. And there's some big open interest levels up there. Right. I saw it, going out, not today, going out, 15 days from there, 17 days from today, in the middle of July, right? All of that's building up there. And so today we're going to see what these SPX option traders want to do. We'll see where the volume comes in. And, after negating the prior week's down bar and reversing it like that, I mean, the mind just shifts to it's going to go higher. Right? Normal. How high? Nobody knows. I mean, it's new all-time highs, but you see as more and more traders start betting that, hey, I may buy this out of the money call. And you see a whole bunch of them start gravitating toward that, thinking, well, if that gets in the money, I'm going to get my payday. Well, sometimes it works, and most times it's a sticking point. So we'll see if it can continue to push up. But looking at the hourly chart, where it's created that pivot, it broke down, it came back up again. Unless it breaks below here, which would then create an area of resistance, we have to assume that it can go higher, step by step. SPX. Well, I'm not so sure about this today, especially the way things are starting out here. you've got this as a line of support, 4250, not much premium. So my thinking is, and up above there at 4,300. Right now, things are relatively quiet, but holding as we looked at. So I think the best bet is if it should go up, just maybe wait for a 5-minute reversal where it maybe reaches a higher level and you could sell an out of the money call spread or something a little bit further away. I don't think you're going to be able to get too far away from the danger today. Now, to the downside, if for whatever reason sellers do take control, just for today, that pullback, could get a little hairy, because the low premiums down here, and it could pull back to there and really not do any significant damage to the chart. So it wouldn't be a big deal, kind of be a big bar for the day if it was to do that. But if we should get, and go back to the futures, if this, let's see how it's going back up, should flip right back down again, well, then you consider up above. But as it falls down here, it's going to find buyers and those premiums will pop and may, come down here. So that's how, I would look at it today, is to wait to see which way it goes, see which way premiums increase. As I say, get away from the danger. I'm not going to be too anxious to, jump in here right at the open, especially with the market just kind of, popping back and forth. And let's see what the others are doing. So the Dow led the way down and it had the biggest reversal up. The idea that what's the weakest sometimes can bring up the rear in a pretty significant way and outperform. And that is quite evident as how this outperformed the NASDAQ, which was, showing relative strength. And this one led the way down, but it had the biggest pop. Now it's right up into these overlapping bars, which it's beginning to stall at. And so now we wait. This is in an uptrend. So we want to wait to see, retest. We get some weakness from an intraday trading point of view with, these futures contracts. We're still going to have to give the benefit of the doubt to the buyers and wait for some kind of failure. And we've had a little minor one on the 5-minute, but it's holding here. So I don't see any advantage at the moment. And here's the NASDAQ just hanging up there at the highs. Right? Didn't do much on Friday, down a little bit, sideways here, uptrend, sideways. However, last week was a wide range bar. So here was the pullback. Here was the reversal by the dip, tails on both sides, indecision. And then last week, wide range bar, which, based on how we look at things, igniting bar, ending bar. Ending doesn't mean collapse. Ending means slowing in momentum. And so one day doesn't tell us much, of course. Actually, no, we don't even have a whole day. But, momentum actually slowed down on Friday. And so now we'll see how things go. Now, the narrower the ranges get, the easier it is to break a prior bar's low. Common sense. So breaking below a prior bar's low and, just looking at what we have here, we've got a little mini breakout bar. These highs aren't exactly the same, but you can see the closes are pretty much the same. And then we get a breakout bar on this day, which has a minor topping tail. Why is it minor? Because it, based on MTS definition, it's not more than 50% of that bar's range. And then there's an inside bar. Today's starting. Breaking below to Friday's low would be a breakout bar failure as defined in MTS course. Right? So what does that mean? Well, from a swing trading perspective, it doesn't mean short, but from a long perspective on a swing trade, it's a rule that says take your money. So on a short-term basis, and I've seen these type of patterns at times lead to relatively significant pullbacks. I don't know what will happen with this one, right? But it did, run up. So there isn't a lot of support below. It's a little bit of a shock pattern since it is that strength. So put a stop under today's low, and looking at the Qs might look different. And you can see the gap up that went nowhere. So they're up here at, almost 351. So up a little bit. Set that alert at Friday's low, just to be aware. You don't have to watch it. And if it starts to break below that, there's kind of a gap that needs to be filled there, and not much support underneath. So on a short-term basis, maybe you're day trading XYZ long and buying a breakout, and you're not paying attention to this. Your alarm goes off. It's like, hey, I remember that this pre-market. Better keep an eye on this stock. That maybe it doesn't it starts pulling back there. The Russell. They now fix this chart. Anyway, it's up at resistance. And let's go to the ETF. You can see the pullback and right back up into the top of the trading range, which has just been a mess all year. So common sense, top of the trading range, sellers. It happened on Friday. It gave it up a little bit. Now we wait to see, does it go right back down again? Does it hang up here at the highs? We wait to see what it does. Same big nasty red bar, negated, and closed up near the high. A little consolidation would make sense. If it comes all the way back down, well, we'll deal with that if it should happen. Bonds are up here a little bit, which means yields are down a little bit. Don't mean a heck of a lot. And what we're going to keep an eye on this week. Where is it? This is what got the markets rolling to the downside when it happens. And the difference between the 5-year and the 10-year and the 30-year. So as soon as it stabilized last Monday, the markets found some relief and ran up. So something that you should keep an eye on as to this thing starts coming down again. Well, the assumption is, big money didn't like it and saw it as someone yelling fire. Well, if it starts dropping again, well, the assumption is they'll do the same thing. And you can see our internals here. Sentiment is almost into the upper band, and breadth is only at the 0 line after a move like that. With a giant wide range bar and running up day after day, it could only get to the 0 line. That's not a good sign. That tells us that, the breadth is narrow. It's not a broad-based rally. So while we see these indices going up, what we would have wanted to see from the bullish case is this being pegged up above 100 or better, not just get up to the 0 line. So anyway, the pattern in of itself suggests, some type of slowing in momentum, a little bit of a rest. It ran up several days. Now there's 4250, which was resistance, and the open interest there. There's a big open interest at that on going out there. I guess next month. Basic concept. What was resistance should become support. So if this should pull back into here, buyers should want to step up. So we'll keep an eye on that. First, we're going to see, does it even break a prior day's low? All right. So that's our step-by-step process. What's our first reference point of support on the daily time frame? The prior day's low. And sometimes you think, well, things are up so many days in a row. And you think, well, it's got to pull back. Okay, reasonable thought. Does it break a prior day's low? No. Well, it ain't happening yet. Wait till tomorrow. All right. 10-year. Just flip-flopping here. Oil still doing well. Just not sure of that chart. Hold on. Yeah. And still, it's coming up to that 75 area that we talked about long ago. And we'll see what it does there. I mean, several weeks in a row up into resistance. Momentum should stall. And gold just couldn't get going last week. I had an alert up there thinking, well, it's going sideways. If it get through here, it'll pop up into the void. It came down so hard. So here's an example of coming down, right? The broader markets came down with a big wide range bar and it popped right back up again. It's not happening in gold. And topping tail, it leads to more like, well, if it breaks these lows, those that are accumulating here are likely to hit the bid. So we look for it to go lower. And we're just waiting to see which way it's going to go. Silver, same story there. I guess I'll say a little bit more aggressive buying, but still not able to get through any of those highs or down through the lows. Bitcoin, just kind of hanging there. So another example of, multiple bars down, which is a wide range bar on a smaller time frame. And it's just hanging down here. So maybe it's a triple type of a bottom, pivot, broke the low and came back up. Jury's out, so to speak. I'm just waiting here. So this is type of patterns that we just avoid until something clearer develops. And you can keep an eye on the euro. If this starts rolling, odds are gold is going to start dropping because the dollar will be going up. And this is just hanging there, and gold is just hanging there. And so it's indecisive right now, which is pretty normal. If the prices drop like this, most are not going to want to continue to sell, thinking, well, maybe it'll pop back up. That's the psychology of the patterns. And you apply bar by bar analysis, and it's like, hey, every time it pops up, it gets knocked back down, and it pops up and it gets knocked back down again. So if you were so unfortunate to, for whatever reason, and I'm just pointing out the euro here, it could be anything you're trading, thinking that, hey, you know what, this is going to continue higher when it was an uptrend, and you get caught in this kind of downdraft, and you're watching this and you're saying, man, I got to get out of this thing. Just let it pop up to the 20, and it can't do it. Everybody starts thinking this thing ain't going up. If it ain't going up, it's probably going down. But we're waiting. Sometimes we wait for miracles to happen. Situations like that. And our transports. One of these flies in the ointment. So we had this bullish move last week, and the transports just kind of sat there. That's not a good thing. We'll see. Can they lift off a little bit this week, show a little relative strength, or is it a message that they're going to go down? And so there's different markets. I call it the tale of two markets. And just looking at the S&P indices, you see materials. That's a bad sign. And financials were able to go up a bit, but nasty breakdown. You've got consumer staples, just a little bit of a recovery on Friday. You've got here these industrials, and this went up, but not so much. The S&P screamed higher, helped by the financials. So we'll see what they do. And energy came up, and it was the best percentage winner out of these last week, but just came up into resistance. So mixed messages here. Unbelievably consumer discretionary. I guess it went up because it didn't go down, because this broke down first. And I mentioned in the weekly letter about potentially, is that short covering? Because, you have something that should go down. Why not short it? And the market's rip higher. And the way this moved up, pop, gap and go, gap, sold, but couldn't go down, gap up again. It looks like that's what short covering would appear to, how it would move, scalded. So kind of different charts. Again, we still these, as I said, mixed messages, and we'll see what this week brings out of what looks great and what doesn't. All yours, Dan.
All right, good morning. Yeah, so Greg, that slide, yeah, we'll be talking about this Wednesday using relative strength and weakness in our top-down analysis. And you know, Greg, also you're showing the sentiment there, the internals, and you know, we're all human beings and we try to do the factory work. But El Alarian was on CNBC this morning, and he's, you know, he says, yeah, you know, I see problems at the latter part of the year, the Fed being late to the party. I see inflation, you know, so he's not dumb, but he's saying, you know what, as of now, you know, just everything's bullish. Kramer got on and said the same thing. So it's like, you know, the market's up this much. It's gapping all-time highs. And it's like, I personally am feeling it's not a complacency, but it's the greed fear. It's like, come on, man, when am I going to throw in the towel and you know, not fight the Fed. I mean, every dip along the way, these buy the dippers have been right. So anyway, I was just thinking of that when you were talking about that. So it's a, you know, a little frustrating when we don't get our desired setups is another way of saying it. And like you just said, we want a pullback or consolidation and buying with those cooked internals. Um, I don't know. So I thought I'd just throw that out there. So all our opens are fine with the exception of the bearish ones. So coin, we have a condor. That one's actually okay, but gapping up here with Bitcoin. We have Beyond. We have a call spread on Thursday's gap down, and I sent out an alert this morning saying that that's a candidate to leg into a condor also. Shop, we did a call spread, climactic, on Friday or Thursday, I forget which day. Yeah, might be Friday. Yeah, I can tell by the pattern. And so we had a nice open profit and gapping up here also. So those are the ones I'll just keep an eye on for possible, um, you know, adjustments. The ARC lady, I don't know if this is an accurate print. Yeah, look at ARC G. I'm not sure what's in the G's. That's a $4 gap on a $90 ETF. That's huge, huge. You know what? I also read something this morning talking about volatility, and it was a skew comment, Rich. Some newsletter said that and what a skew is, an option skew, is it looks at out of the money calls and puts, and it compares the price of them, and typically there's a skew to puts because people fear downside drafts, emergencies, if you will, you know, flash crashes, more more dangerous than upside rips in your face. So that's why puts are generally more expensive. But the skew measures how much. And so this thing I read said, wow, a skew is like the biggest in, you know, X number of years. So what that's telling me is, I don't know if it's just, you know, the market makers jacking those up to protect themselves, or if there's some smart money now buying some out of the money protection that are driving up the price of those. But you know, something's going on there. All right, Uber, Matul. Yeah, it's worth watching. It's at the high end of the range. Lift has been stronger. Let's go through a couple things I have here. Figs gapping up. Recent IPO. Oh, and on Birdie, well, I call it Birdie Bitcoin. Birdie here. I did a a seminar for one of these trader groups on Saturday, and it was on bottoming patterns. And I purposely gave them this chart at the beginning and then the end of my presentation, so you could say, hey, you know, did you learn anything in 45 minutes? And I went through, you know, the pros and cons, you know, using our approach. I analyzed the chart, but also bear in mind that this was on Saturday, so it was just this red bar. And I said, I don't know. I got mixed signals here, so which is okay. I said a conclusion of I don't know is fine because it means there's no tradable event yet. But I did give different hypotheticals. I said, you know what? What if we open up above the red bar on Monday? Then, you know, now you got my interest because this made a lower low and snapped right back. But the red bar, you know, was a 180 reversal. Let's see on YouTube, Popo, Polly. Yeah, Polly, I actually posted, folks. Let's see, I don't know if I gave it in the green room. Oh, no, it was not Polly. Started with a P. Anyway, I'll get to it in a minute. Well, let me find it because that was a good one. Posted it in Telegram. Give me a second. Okay, so I posted our AMWL. Perry, yeah, Perry, thank you. Perry, this looks fantastic. Perry, you know, it's a 1, 2, 3. I lost my gappers here. Oh, wonderful. Now, I hate this thing, man. Look at this. I'm trying to get stocks with pre-market and it's grayed out. Does anybody know how annoying that is? Well, we're just gonna have to deal with post-market gap. All right, so the gap's too big, but it was a 1, 2, 3 on the daily. It was a wide range breakout. Dean, drop down weekly, and it's a buy setup on the monthly. So Perry, I wish it was just gapping right over these red bars, right over Thursday's high. Would have been beautiful. And then we do a 10, 15-minute high, something like that. All right, Copo, Poly, CPSH. Yeah, it's a bottoming pattern. It's a breakout, 30-minute high. You know, it doesn't have the something bar, the shock bar that would make it even better, like a downside shakeout, wide range igniting, but it's worth watching. CTSH, I see no pattern there except maybe for a day trade. It's in a downtrend, snap back, and then Friday had a bullish close. And TTD, that one's too far from the 20 for me, but it's in the and at a prior high. And NVIDIA's a beast. I mean, what can you say about it? NVIDIA is a beast. SMH, look, semi's breaking out here. Red bar ignored, breakout. If we close like this, that looks higher. Q's all-time highs. Look at Apple here, ripping pre-market, but no great pattern. Netflix, we still have a put spread. We're in trail mode. Alpha India, we have a put spread. Yeah, this